please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Storyboard. This is Shibani Gharat. In a news that shocked all of us over the weekend, Sir Martin Sorrell stepped down as the CEO of WPP. What will WPP do without Sir Martin Sorrell? With more than 400 operating companies globally, WPP has just lost the man holding the empire together. We have had several opportunities to chat and meet up with him on platforms such as the Cannes Lions Festival, the World Economic Forum at Davos, and also many times in India. We get you some of our conversations with the man who was a global industrialist, the network and the advertising leader, and someone who loved India and also CNBC TV18. Let's take a look.
We're here in Davos with Martin Sorrell. Thank you very much for joining us.
As I was trying to say, tail end Charlie. We're demob happy, Shereen. We're finished.
You're finished?
Nobody believes that we're going to be exhausted at the end of a week in Davos or 3 or 4 days.
But are.
We are, yes. You are as well, I think. You've had enough, I've had enough.
You've had enough of what, the conversation?
Too much talk, too little action.
Too little action. No, but, you know, the fact that we have Trump in the White House, yes, and the fact that Brexit has happened.
Not yet, I think
well, in a few hours.
In
a few hours from now. You know, these are symptoms. And we're having a conversation about the symptoms, but are we really having a conversation about the cause itself?
Well, I think, you know, if one listens to the analysis that, I mean, I suppose Steve Schwarzman and Scaramucci were the two key proponents of the new Trump regime, if you like, because there were no Trump transition team people here. But if you listen to, for example, what Schwarzman says about the president-elect and going to be president focusing on economic growth and jobs, that probably, and I would agree, I mean, he looks at the Obama administration and sees 1.8% compound growth rate in GDP. That's not enough. I mean, it's infinitesimally small in relation to what India is achieving, for example, and it shows in our numbers and everybody else's numbers. So when you think about that, that will create jobs, employment, and that's the key issue. We all know that if we get economic growth, same thing is true for India, you get more jobs, people are happy. Now, the technological risk or effect is, in fact, people here argue about whether technology creates more jobs than it destroys, and my view is it's a net destroyer of jobs. So that issue, so domestically in the US, maybe Trump is a good thing.
But what is giving investors confidence about the US story? Is it the fact that
tax rates down,
yes, but is it the fact that you have Wilbur Ross as Commerce Secretary? You know, you have people who understand business, who have been proponents of free trade and globalization. So, you know, one argument is that the US is not headed into being an isolationist, that it's not necessarily going to be anti-free trade. It's just going to want to do more bilateral deals.
Net, I think Trump is positive, clearly positive for the US domestic economy. The question is, what's going to happen internationally? That is totally unpredictable. We're in the Al Gore...
So has there been a completely different foreign policy discussion here at Davos?
Well, Al Gore made the distinction between risk and uncertainty. Risk being something that you could sort of manage because you knew it. Uncertainty is about black swans. We're in the uncertain area on foreign policy for the US. So you've got this counterbalance. So best way of putting it, your gain on the US swings, I think, in the short term, I think 2 or 3 years' time we'll have an inflationary sort of Keynesian deficit-driven boom in the US. It certainly lasts for 2 or 3 years. And then internationally, it's much more unpredictable. Mexico, Mexico, well, Russian relationships. I mean, the Russian economy domestically is not doing too badly, right? For foreign firms in Russia, like ourselves and our clients, it's not that easy.
Is the world ready for Twitter diplomacy?
Well, you know, there's the debate here. Some people here believe that, you know, times have changed, that you and I are old farts in the sense that we look at things through traditional eyes, and maybe Twitter diplomacy works. I mean, short attention spans.
142
characters seems to work. So it certainly wins campaigns, but whether that's the reality, some people believe that's a style that will work. Maybe the pace of things is so great. Now, you know, Modi is a wonderful communicator. He's at the top of the tree, along with people like Macri in terms of turning a country round psychologically.
How are you preparing yourself for a post-Brexit era?
Well, for us, it's difficult because 4 of our top 10 markets, Germany is number 4, France is number 6, Italy is number 9, Spain is number 10. So I have no choice. We have 4 of our top 10 markets are in those countries. They're key EU markets, and EU itself is an important market for us, if you like. So we've paradoxically, or counter to what you might think, we've actually increased our activity in EU. I mean, it's the reverse effect. At the same time, because of these bilateral opportunities that the UK will have post-Brexit, you know, if we are going to become a new Singapore, low tax rates, you know, a competitive environment.
Anybody who has spoken to Martin Sorrell, myself included, will be in no doubt about his fierce grip on numbers, his ability to spot, read and project the much bigger pictures emerging from them, and his swift action based on his analysis of the news. I have had the good fortune of meeting him every single year at Cannes Lions, and this was one such morning when I caught up with him only a few hours after the Brexit outcome shocked the world. Let's take a look. Every year at Cannes, my Cannes experience is incomplete without speaking to one person, and that person is Sir Martin Sorrell, whom I catch up with on the final day of Cannes Lions. Again, Sir Martin, pleasure talking to you.
Very flattering, but probably untrue. But
it is true.
Okay.
It is true. Welcome to the show.
Good to be here again.
The Cannes and the way in which technology is present everywhere, right from the Ferris wheel opposite the Palais to beaches occupied by only tech companies. Do you agree with that?
Well, I mean that's what it is. I mean, it's, you know, our business. Last time I checked, Maurice would be saying that half his business was technology. So you can't complain that half of the festival, or, you know, is not technology. So I mean, I don't get that. So I mean, you can't deny them a presence. I mean, I don't know. Maurice never reveals the numbers, but he knows from us that our biggest investment of our media budgets with our clients is Google. Second largest is the Murdoch Nexus. And then third is Facebook. So, no, I don't think you can stop that. I think the scale of it, maybe you can moderate it.
Yeah.
But, you know, if the agencies are not willing to invest, if you're organizing this, you know, the gaps will be. There's another, you know, clearly the Chinese companies, whether it's Tencent or Alibaba or JD.com or Huawei or Xiaomi, they're all going to fill the vacuum,
yeah,
as well as the technology companies. I think in the old days, it used to be the traditional media owners who had that position. They've been displaced to some extent by the new media owners, although they deny they are media companies and they call themselves technology companies. But, you know, that was ever that. Snap is trying to build its. I have not been to their space, but my wife tells me that the space their space is really outstanding, beautifully designed, and they have the Ferris wheel, as you you said. I mean, you know, when was the last time we saw a Ferris wheel at Cannes?
Correct.
It's an interesting idea. Whether it's the right idea for Snap or not is another question.
What's your opinion on you know, traditional agencies with the new age agencies like AKQA and Sapient Nitro working together?
I hadn't noticed that any traditional agency had remained totally traditional. So I mean, I think, you know, it's easy for you to say, but, you know, most traditional agencies, whether you define them as, you know, where you think about them in the context of us or our competitors, are in a process of significant transformational change. So I don't know quite what you mean by traditional agencies, but the digital agencies, you mentioned AKQA, and you mentioned Sapient, and, you know, RGA would be, I mean, they are pushing, in our own case, Wonderman, Possible, VML, are all pushing Mirum, are all pushing the boat out in terms of their digital expansion. And then, you know, the third area was we're experimenting a lot, whether it be, you know, with the NFL this week, with Game Pass, with Keltra and Unilever Ventures on DCOs, but dynamic creative, whether it be Mike in terms of content for millennials, 88 Rising last week, or again on millennial content. So we're doing a lot in experimentation, but, you know, whilst you tag them as traditional agencies, and you, by implication, you say they're a bunch of bozos, that's a bit unfair, because they're changed very significantly.
I didn't mean that.
Well, that was the implication of what you said. The new wave agents, digital agents, are totally virtuous. No, I mean, everybody has those vices and virtues. But those are the three strands of it. Traditional agencies, again, using your phrase, becoming obviously much more digital and much more content and data orientated. The digital businesses that we have and have been established, driving forward. And then last, experimentation.
Hello and welcome to Storyboard. Every year at Cannes Lion, there is one day in a week that we have an interaction fixed with a man that we love to have on our show. That man is Sir Martin Sorrell.
You say that to all the boys, not just
Not
me.
at all,
yes,
just to you.
Say that to everybody.
So we have one day of the week fixed for an interview with you, ear on ear, and
right.
that day remains the same.
Right, Saturday morning.
Saturday morning, indeed.
Right.
So welcome to the show.
Thank you. Good to be here.
We're getting into the 7th month of the year. What is your prognosis for 2016-17 as far as media business, media and advertising?
Well, the world's growing at 3.5%. We're doing much better than that. We're doing double digit in India, so India is a shining beacon. But the world's growing at 3.5, 3 being real, nominal being 3.5. That's what the industry is growing at. Advertising proportion, GMP, in the slow growth mature markets is still probably growing less than GDP. In the fast growth markets, more. The BRICS have slowed, but the next 11, as we call it, Vietnam, Philippines, Indonesia, other markets like Mexico, Argentina, the Macri effect in Argentina. Macri reminds me a little bit of Modi, both initial names M, but the Macri effect in Argentina has been phenomenal. We're running an investment conference down in Buenos Aires in September. I think it's the 12th and 13th of September. Argentina open for business. So there are parts of the world that where we can be much more optimistic about. But the big engines, are spluttering. The one engine that's still going of the BRICS, or the BRIC countries, is India. But 3.5% growth. I think that will be a very similar picture, maybe a little bit less because of Brexit this year, finally, and a little bit less next year because of Brexit. But basically, low growth, moderate growth, low inflation, and therefore little pricing power, and then a focus on cost. I mean, the world is far too short term. This is the biggest issue. And the Brexit creates uncertainty. Uncertainty is the enemy of growth, so it's going to make it, this conundrum of breaking out of this low growth trap, even more difficult to deal with. So we just have to stiff upper lip, as the British do, put your tin hat on, and try and cope with a difficult environment. I think it's too short term.
That's a good way. That's a good approach.
CEOs last for about 6 to 7 years on average. 5 to 6 years of CEOs, 6 to 7 years. CFOs, 5 to 6 years. CMOs, 2 to 3 years. So they tend to think in those chunks. If you look at the S&P 500, it's distributing more than 100% of its retained earnings in dividends and buybacks. So the S&P 500, that's what it did in 2015. So what it's signaling is management signaling that they're better to return the profitability to shareholders to decide what to do with it than make that decision themselves. So they're shrinking effectively. That tells you how short-term the attitude is. We, on the other hand, believe in brands. You believe in brands. CNBC better believe in brands and in innovation. And if I look at the top 100 brands that we survey every year, and if you and I invested in the top 10 for the last 10 years, we would outperform the MSCI index by 300% and the S&P 500 by 75%.
Any Indian journalist meeting Sir Martin Sorrell in India or even overseas would know that he always remained very optimistic about India and also held strong and defined opinions about the subjects impacting our economy, from demonetization to GST and Baba Ramdev to Narendra Modi. He would often say he loved India because the rest of the world was a tough place. How much? Well, let's take a look.
Starting today, Sir Martin Sorrell, the CEO of WPP, will be joining me on a monthly basis to discuss all the major events, intricacies and highlights in the communications, marketing and advertising universe. Today, Sir Martin is in WPP's London headquarters. To begin with, Sir Martin, your reactions to the Twitter IPO price.
I mean, it's very difficult to comment on the Twitter price, IPO price. I mean, IPOs are prepared a long time in advance. The IPO issuers are advised by, usually, it's not unlike the Google IPO, which was on a bidding system. They're advised by very clever and insightful advisors like Goldman Sachs and others. And I'm sure that the market made a sensible decision. But when you look at it, as maybe you or I look at it, revenues, operating profits, or lack of profits, obviously and multiples of revenue. I mean, I really wish that WPP was selling on the market at the multiple of revenues that Twitter has. But obviously we don't have the compound growth rate that Twitter has. But we certainly have more profitability, thank goodness. So it is difficult to get your mind around that sort of valuation when you look at it on a revenue multiple, when you look at it on a operating profit multiple where there isn't an operating profit because it's still making losses. And I think the loss widened actually, if I remember rightly, just prior to the IPO in the third quarter. So it is difficult using a conventional mind like mine to get your mind around it. Having said that, we live in unconventional times and we live in different times, and I don't want to be labeled as an elephant, despite the fact that I'm talking to you in India. I don't want to be labeled as an elephant or an ostrich. Right. And we obviously see other things happening elsewhere in the world where valuations are extravagant if you look at it with old eyes or the usual criteria. Now, having said all that, Facebook, Twitter are enormously powerful branding media and enormously powerful public relations and public affairs medium or media. And I think you have to look at it contextually. So I look at Google as being primarily search, mobile search and video, and that's very powerful. I look at Facebook as being a very powerful branding medium. It's the largest, will soon be the largest country in the world, bigger than India and bigger than China. And I look at Twitter as being a very, very good branding and public relations medium. The latter two, Facebook and Twitter, are more what I would call social media. Google is more targeted, and then you have Amazon and Apple and Microsoft and a whole host of others, and newer ones like Snapchat, which are Instagram, Pinterest, which are equally powerful or potentially equally powerful social media. So it does look expensive to sum up, but I think when you start to look at some of the changes that are taking place, maybe it is not as expensive as the first glance would suggest. And certainly in the aftermarket, Twitter has performed reasonably well. We have to see what happens when the lockups come off in a few months' time, because obviously it'll be a bit bumpier when lockups come off and people realize some profits.
To go from the Twitter IPO to rumors that WPP is buying IPG.
Well, whose rumors, Anna? I'm very disappointed in you. You seem to be relying on rumors that get printed in the Daily Mail.
Right.
It's such a slack news day that you're using the Daily Mail now as your sources. I worry for you.
No, it was Bloomberg. It was Bloomberg.
No, Bloomberg, wrong. Bloomberg picked it up from the Daily Mail. So everybody is going to the Daily Mail for the rights. The editor, or the person who wrote that article, Jeffrey Forster, I think his name is, told me when I asked him that the reason he printed that was that two city gossips told him that it was a possibility. And would you believe that the real clincher was a spread better put a large amount of money on the possibility that IPG would be sold. Not the WPP would buy it, but the IPG was sold. I mean, as I said in Barcelona only yesterday, from where I've just come back, we think that both IPG and Havas are overvalued, have exceedingly high valuations, and we have no interest.
Hello and welcome to another edition of 30 Minutes with Sir Martin Sorrell. Sir Martin has been in India for the last few days, reviewing his activities in India. He's come here shortly after meeting Prime Minister Narendra Modi on his visit to the US. Let's hear what he has to say. Sir Martin, thank you for talking to us, as always.
Good to be here, Anna.
So, touch upon a subject you've spoken about 3 years ago with me, which is the need for marketers to sort of decentralize their offices.
Well, globalize and
localize.
Because power is moving to the center, whether people like it or not, but also power, I think, should be devolved to local markets. I mean, it may sound a bit paradoxical, but I think it's true. The pressure is on regional.
Right.
And I think, if you said to me, I think that's because of technology and improvements in technology, and people at the coalface, if I can put it like this, and in the front line know more about what's happening than people at the center. But there's also a need to coordinate things and not reinvent the wheel continuously. And I think agencies should take on the coordination and integration function, and clients shouldn't waste their time. We have 190,000 people in 112 countries. You know, we're in the ideal position to try and manage and help clients manage at a time when growth is tepid, GDP growth is tepid, inflation is low, therefore there's very little pricing power. Right. There are disruptors, there are these zero-based budgeters out there, and the activist investors who are forcing our clients to drive down costs. And that's the reason why that regional sort of band or layer is being squeezed. I remember Jeff Immelt at GE saying at a Microsoft conference a couple of years ago that regional stop things coming down and stop things going up. They have the power to say no rather than the power to say yes. But technology has made organizational spans. You know, if you called McKinsey a few years ago and said, what's the optimum organizational span, they might have said 12 or 13 people. Now I think my view is it can be more than that. And you know, what I said yesterday, which caused a little bit of social network activity, was, you know, when you think about it logically, why would you treat India or China with 1.2 or 1.3 billion people organizationally the same way as you treat Portugal or Greece or Singapore with 5 million people? You either break India and China into states, organizations, God forbid, or regional, northeast, southwest, or you take Brazil, Russia, India, and China, which are the four big boys,
right,
Indonesia
girls,
perhaps, and make them direct reports, and that immediately simplifies the organizational structure. I mean, it makes it more horizontal, but that I think is great, more efficient, because information flows. I mean, I was speaking to one client here who said, you know, MNCs, you know, are not as agile. That's one of the reasons why the local companies are making greater, you know, what we call the Asian power brands, right, are making more progress, I think, than the MNCs. And the true competition to the MNCs are not fellow MNCs, but the local companies. Right. So it may be that this change, this focus on global, focus on local, squeeze on the regional middle, is being driven for the wrong reasons by cost, but I think it is the right answer, because I think organizationally, because of technology, because of the changes we talk about, that's the superior way of organizing.
With that, is a wrap on Storyboard this week. You can catch all of our content on Facebook, Twitter, and YouTube. Thanks for watching, and we'll be back same time next week. See you soon.